Hi everybody, today I wanted to talk about real estate investing and flips because so many people are doing this and a lot of people don't actually know what the rules are with the IRS, so I thought I would cover a few of those. And again, I am Holly Signorelli, CPA and wealth strategist. So I do a lot of this real estate investing and the tax returns, so I'm going to give you a few pointers. The IRS is on a real mission for people that do rental properties. They want you to put in like at least 500 to 700 hours to each, or 750 hours per property. So if you are doing rentals for a living and you have, let's just say 10, then you're supposed to put that much into each property. And if it's also just like a rental and you're using a company to take care of repairs and things and you're not actually doing those repairs yourself, then the IRS looks at that as a passive investment versus an active one, which means that if you have any losses, you will not be able to take them. Now, there is a special rule for people under, I believe the number is like 250,000, but if your income is above that, you will not be able to take losses on a rental property. And typically that's for just an individual that has just one rental property. But I think the bigger thing is the flipping that people are doing. And one of the things that you need to know is, and this is a common misconception, is when you flip a property and you buy another one, you still have to pay tax on the property that you flipped. You still have to pay tax on the property that you flipped. Now, a lot of you or some of you have heard about the 1031 exchange. So just in case you don't know, I'm going to make it real simple right now because you'll probably need to talk to an attorney or CPA if you're going to do this. And what that means is that you sell a property, but the money goes into an escrow account, and it's usually with an attorney or someone that works underneath an attorney. And so the money goes there and you don't touch it. And then you have 45 days to find your next property. You don't have to buy it in 45 days, but you have to find the property and locate it or whatever. And then you have a total of 6 months, including the 45, to buy the property. And then what happens is that the person that is handling the escrow account on the money of the rental or the flip that you put the money into that you haven't touched, they buy the property for you. So then you have not touched the money, and then you've gone into the next real estate flip. If you don't do that, you have to pay the tax on the first flip, even if your second flip is a flip flop. If you don't get any money for that, I have seen this happen over and over again in the years where somebody puts a lot of money into the next flip and it doesn't work and they still have to pay the taxes and they don't have the money for it. Now, one last thing. If you are flipping properties for a living, if the only thing that you do is real estate, including flipping and rentals, then the IRS doesn't have a hardcore number. But if you do that for a living and that is your job, then the IRS will definitely come to you and make the income be ordinary income. So that means just like if you had a W-2 or you have a partnership or an S-Corp, the flipping properties for a living without having another job, then it's no longer an investment. So you don't get the smaller tax rates like you do on an investment because the IRS is considering that this is what you do for a living, just like you would go to a job, and they'll make you pay the higher tax rates based on how much money that you're making from your flips and your rentals. So if your income was small, then you'd still be at those smaller rates. But if you were making a lot of money, and I've worked with a lot of people that have made $1 million deals on these kind of things, then you will pay those higher rates at 39.6%. And I hope this information helped you. If so, then hop on over to my website, hollysignorelli.com. It's also themoneytherapist.com. It's easier to remember that name, right? I'll see you next time.